Hello everyone, welcome to this full X-ray analysis of Zomato, now called Eternal Limited. The company that's changing how India eats and shops. Started back in 2008 from a simple restaurant listing site, today it's a giant in 800 plus cities across India. It runs food delivery where you get hot meals at your door, Blinkit for super fast 10-minute groceries, Hyperpure supplying ingredients to kitchens, and even District for nightlife spots. Last year, FY25, they made 20,243 crore rupees in revenue. That's huge money. Market cap around $30 billion. But for you finance pros investing, is Zomato a safe bet or a risky bet? Let's break it down step by step, slide by slide. Stick around. Let's start with the money story. Revenue growth that's like a rocket launch. In FY22, just 4,000 crore rupees, and they were losing cash big time. FY23 jumped to 7,000 crore rupees, still red. FY24 hit 12,000 crore rupees, getting closer to break-even. Then boom, FY25 at 20,243 crore rupees, up 60% from last year. And get this, in Q3 of FY26, revenue shot to 16,663 crore rupees. That's 200% more than same time last year. Profits turned positive at 527 crore rupees for FY25. Why? Shift from just food to quick shopping like Blinkit. Simple question. Can they keep climbing without crashing? This is key for your stock picks. Now, where's all that revenue coming from? Think of it as a pizza pie divided up. Food delivery, the classic biryani at door, takes the biggest slice at 40%, that's 8,078 crore rupees. Hyperpure, their business selling fresh stuff to restaurants, grabs 31% or 6,194 crore rupees. Blinkit, the 10-minute grocery hero, is 23% at 4,727 crore rupees and growing fast. Rest is 6% from things like District app. No more depending only on food orders. This mix makes Zomato stronger, like a balanced investment portfolio. Less risk if one part slows. Exciting shift, right? Zoom into profitability. Q3 FY26 numbers are fire. Total sales 16,663 crore rupees, but costs were 16,493 crore rupees, almost matching. Still, EBITDA, that's earnings before big expenses, came in strong at 716 crore rupees. Net profit, up 73% year-over-year to 102 crore rupees. Food delivery holds steady 5% margins, while Blinkit is learning to make money as it grows. It's like a young business finally paying bills on time. For investors, this means real cash flow coming. Watch if it sticks through competition. Food delivery is Zomato's kingdom. They own 55 to 58% of the market, while Swiggy has 42 to 45%. Secret weapon? Zomato Gold subscriptions, 12.1 million members as of early 2025, driving over 50% of all orders. Average order value keeps rising, covering 800 cities big and small. It's like having loyal customers who pay extra for perks, free delivery, discounts. This sticky model beats one-off orders. Duopoly with Swiggy means stable shares, but stay alert. Now, the hottest part, Blinkit Quick Commerce. As of September 2025, they lead with over 50% market share. Gross order value doubled from last year. Average order 660 rupees. Not bad for fast groceries. Over 250 dark stores packed with 45,000 products, expanding to smaller tier 2 and 3 cities. Imagine getting milk or snacks in 10 minutes. That's the magic. Blinkit isn't just competing. It's pulling ahead like a race car. Main rival Swiggy, tough fighter. In food, they have 42% share. Their Instamart quick service grew 101% year-over-year in Q4 FY25. Average order even higher at 697 rupees. Freshly listed, loaded with cash for fights. Price wars happen. discounts to grab users, but Zomato's ahead in scale. It's a two-horse race mostly, exciting for us watching stock battles. Who wins long-term? Don't ignore others. In quick commerce, Zepto grabbed 30% last year and pushes hard. BB now from Big Basket. Flipkart's new minute service. Even Amazon lurking. Globally, DoorDash and Grab watch India. But Zomato's local know-how and size give edge. Could see buyouts if someone burns too much cash. Keep this radar on for surprises. Zomato's full world ecosystem like a big family working together. Food delivery brings customers. Blinkit adds quick buys. Hyperpure sells supplies to restaurants. District finds party spots. Zomato Instant does 10-minute food from special kitchens. They share data. Customers cross-shop. Free marketing. Like Amazon with everything connected. This setup protects them better than single apps. Who buys from them? Hyperpure supplies 45,000 restaurants and hotels daily. Fresh veggies, meat. Main app has lakhs of eateries as partners. New deals with grocery chains too. Good news, no one customer is too big. So if one leaves, no big hit. Strong power to set prices. Reliable base for steady growth. What pushes growth? Number 1. Quick commerce exploding at 40% yearly to 2030. 2. Entering more Tier 2, 3 towns. 3. Gold subscriptions keeping users hooked. 4. AI making deliveries smarter, cloud kitchens faster. 5. Holding UAE market. These are real plans, not wishes. Expect 20% plus growth yearly. Your portfolio could ride this wave. 10-year road. By 2030, quick commerce alone $10 billion plus. Whole food market to $50 billion by 2035, growing 10 to 11% yearly. Zomato aims 1,000 dark stores, revenue to 2 lakh rupees crore at 25% speed. If they deliver, like recent expansions, huge wins. But needs perfect execution. Dream big, invest smart. First red flag. Money burning on ads. 1,972 crore rupees spent in FY25 alone. Total costs 20,623 crore rupees, almost matching 21,320 crore rupees revenue. To grow users, they spend like crazy. Necessary but risky. Like startups, but at scale. If sales slow, profits vanish. Check cash reserves closely. Red flag 2. Cutthroat competition. Swiggy and Zepto slash prices to steal users, Flipkart jumping in. Duopoly sounds safe, but wars hurt profits. Lower fees, more discounts. Could drop market share fast. Protect the castle or lose the kingdom. Third warning, government rules. GST at 18% on their costs but only 5% on sales, trapped money. Antitrust might split duopoly. Labor issues at dark stores. Sudden law changes could cut 10 to 20% profits. Politics and taxes. Biggest hidden killers for stocks like this. How expensive? Price to sales 10 times FY25 revenue. Market cap $30 billion-ish. High because of growth promise, like tech stocks. Compare Swiggy, similar. Buy if you believe story, sell if doubts. Value hunt on pullbacks. Bull side, top dog in duopoly. Quick commerce king, 20% growth locked in. Profits now funding more wins. Perfect for 5 to 10-year hold. Imagine shares doubling every few years. That's the dream play for India boom. Bear side, cash burns wild. Price fights bleed money. Rules crush margins to 5%. If Blinkit trips, stock halves easy. Don't bet the farm. Too many traps for short term. All risks in one. Competition high risk, regulations medium, running the business medium, economy low. Best case, 20% growth. Worst, 5% crawl. Test your thesis. Spread bets. Don't go all in. My call. Buy and hold for next 5 to 10 years. 25% upside if quick commerce flies. Latest Q4 FY26. Revenue 17,000 rupee crore up huge. Profit 174 crore rupees. Strong ecosystem wins wars. Finance friends, Zomato fits growth portfolios. Like, share, subscribe to Account Finance with Ravi for more X-rays. What's your take? Comment below.
Subscribe to Account Finance with Ravi for finance and accounting insights.